Take a look at the closing grain and livestock numbers for this Thursday, July 16th, 2026. I'm Jamie Dickerman on the Red River Farm Network, and we are joined by Midwest Market Solutions President Brian Hoops. And Brian, interesting day here in the markets. We saw the wheat just go crazy yesterday, kind of backed off on that, and we ended up mostly in the red here on the board today as we end things.
Yeah, we've set back a little bit. You know, we pushed higher into the overnight session in all the grains and made some new highs for the move. It did seem like maybe there was some hedging pressure that came into the market that capped the rally, maybe a little profit taking, in fact, after such a nice move. You look at like Kansas City wheat, for example, you know, we were trading in the December contract, we were trading below $6.50 a bushel at the end of June, and we rallied to over $7.40 last night to the high. So, you know, you're looking at a 90-cent rally, and I think we've rallied $1 in Chicago from our June lows to now, and that's a 2-week rally. So we have to reward that type of rally. When you see something that big and that aggressive, that fast, producers really need to step up. Cash sales need to step up, old crop sales, new crop sales, maybe some hedging efforts, and I think that's kind of what capped our rally here as we're getting closer to the end of the week. Now, we don't expect that these ports are going to be open right away again in Odessa or Ukraine and Russia, so we may get some export business, but there's a lot of wheat around the world, and it doesn't mean that the U.S. has to fulfill all of that export business. In fact, with this rally, maybe we've priced ourselves out of this export market with this surge in values. But it's been a real godsend for producers that have harvested some winter wheat in the southern plains, in the upper plains that are going to start or are in the middle of a winter wheat harvest. And for corn and soybean producers, the forecast has been hot, but it's going to moderate, and that gives us a pretty good growing conditions. And so it's hard to sustain beans at over $12 or corn over $4.70 when you have really good growing conditions right now.
You look over here into the cattle markets, and again, another day of the cattle closing on the negative side.
Yeah, I think this is the 15th consecutive session that we've closed August cattle lower, and I think it's 19 out of 20 sessions. So it's been a brutal slide. And, you know, there's sometimes we can tell clients that there's good news or this particular fundamental in the market is showing signs of recovery. And so, yeah, it is going to turn around. I'm at a loss to find any of that really good news right now. The cutouts are down almost every day. They were down again at midday. The cash is lower. The packer margins are still deeply in the red, even though they're buying cash lower because the margins aren't improving because the cutouts can't improve in their values. We're just not moving enough boxes. We're not seeing enough export demand, and it's kind of catching up with us right now with all these fundamental negatives. And now the technical trends turning lower, the funds have turned into buying dips in the market to selling each and every rally. So if you notice the openings, if we open a little bit higher, those rallies get sold almost every morning by the fund traders.